Hi, everybody, and welcome along to the Mint Monthly Update. Thanks for joining us so we can talk about the month of October. Today, you've got myself, David Fyfe, and Sam Arcand is joining us today to talk through the funds. I guess just sort of thinking about the month that was and where we've come from, the driver of the month, and it was a strong month for local markets, was really around what the central banks are doing, and more specifically, what the local central bank is doing. And I guess, the slides and these charts here I thought would be interesting, just showing, New Zealand on the far left. What this chart is showing here is what the neutral rate, I guess, in terms of, where the balance between inflation and growth is, and just looking at where we are currently versus that. And as you can see from New Zealand on the far left, it's sort of showing that, we have the most room to cut, which is quite interesting. And similarly, the US, whereas, when we're comparing a lot of our Trans-Tasman funds, you look at the far right with Australia there, and they're actually not too far off what's considered a more neutral rate. So, I guess the relativity of the two markets, we even saw a bit over the month, because clearly, we saw the RBNZ cut 50 bips as expected. But it is an interesting point in the market, because obviously towards the end of the month, we did see rates back up a little bit, partly on the election in the US, partly within Australia itself, around what they're seeing with inflation through there. So certainly, we expect a lot more cutting from our part of the world than the rest of the world too. And then just touching on the right, one of the drivers of the macro conditions we're seeing at the moment, particularly weak, is one around employment. So while we saw the employment rate tick up, what's sort of not always captured in it is what's happening in terms of participation rates and immigration or migration of people. So, the total employment has been shrinking in New Zealand. So it's certainly been unhelpful for growth, and it continues to sort of press on results as we've sort of seen throughout the month. And just rolling over to the SRI fund itself, had a really good month actually for the fund. A couple of key stocks did particularly well. I actually had the privilege of being able to go over and see Mainfreight. That was one company that updated at an investor day in Dallas over the month, and I managed to get over there to meet with the management team and the company itself. Now, it was a challenging update. Obviously, as we were talking before, New Zealand was one of the big drivers in terms of softer activity. And as you can see in the top half of the diagram there, the transport business was one that, while it did okay at a revenue line, certainly suffered in its margins. And that was largely driven by New Zealand, lower activity levels, lower freight being moved around, and a bit of pressure on costs as well. And competition especially. But overall, as a business, where it did suffer was actually a little bit in the warehousing and air and ocean. We sort of heard a lot about freight rates in air and ocean for a while. While they have bounced back a little bit, the benefit from that hasn't been seen at the bottom line for companies like Mainfreight, and this is largely due to the excess capacity and limited demand on a lot of trade routes, which has seen heavy competition for that capacity, and then certainly seen margins squeezed, and it's a bit painful through there. And you can see in the bottom half of the chart, that was very much the case in New Zealand, where they broke it down by product for us. But warehousing, it's a mixed one for Mainfreight, and one that we actually expect to improve over the next 6 months or so. A lot of capacity has come on, especially within Australia. And parts of Europe have also had issues around activity and sort of, I guess, overcapacity as well. So, as they look to fill those warehouses and we see more activity hopefully bounce back, we look to see some improvement from Mainfreight's results through there. What else went well for the fund? Well, Serco was the top performer for the fund for the month. And what happened there? Well, we actually got a bit of an early half-year update from the company, partly timed with a transaction where they purchased a US online booking tool called Get There from Sabre. Now, Sabre is a big player in the corporate travel industry, and is one that's been partnered with Serco for a while. But that was an excellent purchase. I mean, they paid $12 million US for this company. Quite scarily, this company in the mid 2000s was actually bought for around 700 million. So things have changed. Certainly a better entry price for Serco, but and what we think this helps is diversify some of their earnings away, not just from their big booking relationship, but also geographically into North America as well. And so we also got an update from those volumes through booking. We actually saw a really strong second quarter come through in the result, which saw the half on half up 17% in booking volumes. So it's completed room nights, which was a really strong number, and certainly saw the company and the stock share price react positively. And I guess with this transaction, we've taken a more positive view as well, and continue to hold the name and see some good near-term outcomes with this business. And we had a couple other investor days I won't go into detail on, but Channel Infrastructure had one up north looking at the value of their Marsden Point land and what they can use in terms of energy precinct, which is quite interesting. And the other one was Scala up as well, talking, it's, name within the fund that did well in the month, but again, looking at their strategy, where they can grow both in the agri and industrial business. For them, it's certainly looking like the US and offshore is going to be a strong leader for growth for them. And obviously, keeping an eye on Trump tariffs and what that all means for global trade is certainly going to be key for these guys. And of course, main freight, as we touched on before. Within the fund itself, we did add scales and a bit more freightways in the quarter, in the month particularly. A couple of big transactions actually of sell downs, which we participated in, certainly helped outweigh those positions and names we continue to like through the cycle. And then just rolling over to the property fund, again, it was another strong month for property, similar to the actual NZX 50 returns, just over almost 2%. Now, I guess the drivers of this was, again, the RBNZ, and we certainly saw, as a result we would expect from this market, but it has had a strong quarter. So, property is sort of well ahead of the rest of the market, from, thinking back to the start of the year. And then just looking over on the chart on the right, it's sort of, when we think about the property sector and it outperforming from here, I guess one of the key features is the yield. And adjusting it for the 10-year bond, I guess where interest rate levels are, we can sort of see that actually, the overall sector isn't looking particularly cheap, especially when you look at names like GMT in the green there. Some of these are trading, almost similar to the actual bonds rate themselves, and obviously you are taking some risk in the cycle as well. But for the fund itself, it did particularly well out of the retirement sector. Certainly help boost returns, and as I said, as a sector, we do expect that to outperform the wider REIT space as well. So continue to hold names like that, and obviously the Aussie names underperformed with slightly different central bank cycle moving through there. And we'll now pass over to Sam to touch on the AET fund and how it performed over the month.
Thanks, Dave. So AET had another good month. Our featured attributor here is Spark, which updated the market with earnings and a dividend cut, which disappointed and fell 4% sort of around a month on the back of that. So Spark facing a weak consumer impacting its mobile business, and as well an update on how the cloud business was tracking, which faces formidable competitors and may continue to be under pressure from here. The hope, of course, would be that as we do see some of that central bank cutting that Dave was mentioning, that the consumer confidence may return and the mobile business Spark may stabilise. What's interesting as well, another dynamic you've got going on is that Spark has actually historically paid out more in dividends than it's produced in its cash flow, which is what I'm showing on this chart just on the side here. Then in FY23, it was able to undo a lot of historical cumulative overpayment on its dividend with some significant asset sales, and then return to form in 2024, which is what has seen it need to ultimately cut the dividend. Though something that maybe came as a bit of a surprise was that they are planning to return to that strategy of asset sales, which probably meant that the dividend didn't have to be cut as far as maybe some in the market are expecting. It'll be interesting to see whether that strategy can resolve the position and stabilise the company's dividend going forward. Other positives, obviously, Serco, which Dave has touched on, and then A2 Milk had an interesting update during the month with data out of China showing that the number of marriages in China, which is one of the good forward indicators for the number of births in China, was a little bit weaker than perhaps what many were thinking. Stock off 7% during the month. And obviously that number of births is ultimately what flows into the size of the market for A2 in China, which is the bulk majority of its earnings. Just touching on one of the negatives there, James Hardie as well had a sort of external data update during the month, but it was weak starts for housing out of the US. That market just struggling to kick on in the face of interest rates, which are very high over there and looking continually as if they're going to be higher for longer than what many were hoping for, certainly the consumer and the housing market over there. adds in the fund this month, Scales, participating in the same activity that Dave was able to for the SRI fund, added WiseTech, a new position for us, which we're got a good entry position on, we believe, and excited about. A bit more future building and Spark, in fact, reflecting a significant underweight position going into the update from Spark, and a little bit of selling in Airport, NextDC, and CSL there to round us out. If we move on to the last one, that's it from us. Thanks for giving us a listen. If you do have any questions or want to reach out, that email address there, info@mintasset.co.nz. Also, feel free to give us a call if you'd prefer. Thanks for listening. Looking forward to another update in a month's time. Thank you.